Okay, so in my last video, I went over how I use the toolkit to identify different plane setups. In this video, I kind of hope to highlight how I use the liquidity toolkit along with the LS and the LT bundle to add confirmation to a lot of these setups that I find. So what we're looking at here is we're looking at SPY on the 1 minute time frame, and these are some setups that occurred earlier today. I was able to catch this this trade here, and I think this is a very solid example of a bear plane setup. So what we're looking on the right side is basically the liquidity toolkit, right? So there's no other indicator on this side of the screen here, okay? And we have the bear plane setup where the 1 minute trigger kind of makes its way up into the 5 minute trigger before turning back down. We have a price close back below the 1 minute trigger. Price finally turns bearish here, and we see the nice push down. Okay. The issue with this side of the screen is the fact that the LS settings, which stands for liquidity status, and it's the part of the toolkit that basically colors the candles by liquidity, is a very conservative setting of LS. Okay. What we see on the left side is an aggressive setting of LS, right? So if we look at the settings, we see that this is set on aggressive versus conservative, and the reporting side is set to full versus simplified. Okay. On the right side, LS is set to only turn bearish if the algorithm is completely sure that price action is going to be bearish. Okay. Versus here, as you can see, right, basically the first candle closed back below the 1 minute trigger, which I didn't enter here. I think I waited a few candles. I think I entered one of these two candles. But if you were looking at the left side on aggressive settings, you would have still got your entry, right, on the first candle closed back below the 1 minute trigger. Versus over here, if you wait till the first candle that's bearish, you potentially miss out on some gains here. Okay, so I think this is a very solid example of why it makes sense to use both. Okay, this was another example that occurred on SPY, and this was actually the first bear plane before the second one that I just showed. Okay, this is not such a good example as the second one, but it's still very nice to see liquidity conditions over here that are a little bit more sensitive. Okay, but both of these LS statuses are in agreement basically. So the first candle that we see red here is the first candle that we see red on the toolkit as well. Okay, so this is IWM, and this was another trade that I was able to catch. Okay, I think looking at something like this here, you basically do see that liquidity on the left side here on the more aggressive settings is starting to turn a light red, which is good indication that you'll see follow through on a play like this, versus on the right side where you see flip back and forth between bullish and bearish liquidity. Okay, not the best picture, but this does paint a better picture of what's happening, especially down on the 1 minute time frame, right? So the 1 minute time frame is obviously, it can be very volatile and you get quick moves, but I think it's nice to kind of have this and look at this at the same time to get more confirmation. Another thing to point out here is just the fact that, again, I think I mentioned this in the last video, but the plane setup that I like to look for the most is the one that occurs after price triggers set up in fully bullish orientation. So we have a price break of all the triggers here, and the triggers themselves set up bullishly. So this is the first retest that we get after that happens, and I think typically that has a higher chance of playing out the right way. I think if we go back to SPY here, that basically kind of shows what I was just talking about, where the first bear plane is typically higher confidence, sees a bigger move down, versus the second bear plane is already pretty extended from the hourly trigger, so it doesn't see such a big move down. But obviously these are both pretty excellent setups, and they both saw a really nice push down with barely any drawdown. Okay, so we were protected very well here by the 1 minute trigger. We had no candle closes above it, so there is no stop loss there. Okay, so what we're looking at now on on the left side of the screen, we basically have both LS, which are the candles that are colored by liquidity, as well as LTs, which basically stands for liquidity triggers. And these lines that we see here are basically liquidity driven support and resistance levels. Okay. There's a lot of different ways you can use LTs, but I think in the context of plain setups, I think it can be pretty simple, right? Because at first glance, I think this can look a little bit all over the place and it can look a little complicated. But like I said, when it comes to plain setups, I think it's pretty simple to understand. Okay, so just like the price triggers on the right side of the screen, in this case here, they're set up bearishly. Okay, that's also what we see with the liquidity triggers. So they're also pretty much set up bearishly. Okay, and all that means is that if price on this breakdown below the hourly trigger makes its way back up, it's going to be met with pretty significant resistance to the downside. Okay, so the higher the liquidity trigger, right? So basically LT7 is the strongest resistance. The more likely price is basically going to shoot back down if it allows for a revisit. And so what we're looking at here, right, is price closing down below LT5 and LT4, right? LT4 is LT89, which, I mean, I'll just show the settings here. This is what I use. LT89 is typically a big factor in deciding liquidity conditions, and so it's pretty common that you'll see price close back below LT89 or LT4, and that's when you'll see the flip in liquidity in the candles. Okay, this is typically what I use to be able to gauge when a flip to bearish liquidity in this case is due to return. Normally I'll be looking at the toolkit on the right side here, but because I have the LTs on and I can see when LT 89 is making its way towards price, I can kind of know whether bearish liquidity is actually going to return or not, right? So I wish I had some examples of LT89. I mean, I don't have it readily available just now, but LT89, a lot of the times you'll see it basically be all the way down here or something like that, and so you'll see a bear plane that looks like it's going to play out, but it doesn't, just because liquidity is not ready to flip just yet, right? But in this instance, LT89 was right on time, and it crossed price here, and it called for a flip to bearish liquidity for a successful bear plane setup. So LTs are basically comprised of higher order LTs, right, which are LT4 through LT7. Okay, these are stronger resistance levels as you make your way up. So LT7 is the strongest resistance level. And then you have lower order LTs, which could be basically act as a good indicator as to what price is going to do in the short term within any time frame. Okay, in this case here, this signifies strong bidding, right? So these lower order LTs are spiking up here as we see our bear plane. That gives us confidence that we're going to make this move down. Okay, so it adds extra confidence to the bear plane setup. Over here, you see them spiking downwards, which signifies buying pressure. Okay, so that's why we kind of formed our bottom here before we flipped bullishly again. Okay, this is the second setup of the day where same thing. Lower order LTs kind of spike up, gives confidence that this play is going to see follow through, and then you see them spike back down here, which kind of marks your bottom before we turn slightly bullish here again. Okay, but I think this is pretty simple to understand. Okay, I think the other picture that LTs kind of paint is the fact that these plane setups are basically traps, right? So in the case of a bear plane, it's basically a bear trap, right? So we're in a strong downtrend. We make our way up. We have a little period of bullish liquidity, but because we're in a strong downtrend, once we get a close back below the 1 minute trigger, you can be pretty confident that that downtrend is going to resume. Okay, and that's what we see with the bearish orientation of the triggers as well as the bearish orientation of the LTs over here. And I think this paints a full picture, right? So Obviously, I think anyone can use the toolkit, and it's pretty standalone, right? So once you get the full candle close back below the 1 minute trigger with bearish liquidity, that is an entry. But if you want to know what's kind of going on behind the scenes when it comes to liquidity, I think it definitely makes sense to look at both of these at the same time.